And good afternoon, everybody. Thank you so much for joining me on another installment of Indian Consumer Behavior. Last week, I got very lucky. Good friend of mine got me invited to a Fintech event. It was called Finding Misfits. It was put on in Bangalore by a company called Arias Venture Partners. And I've got a couple of interesting insights to share from that event, as well as a suggestion of a strategy that that the banking and fintech leaders listening to this video might be able to follow to solve for one of the problems or two of the problems that they talked about. So before I get into that, last week I did something that I thought was kind of fun. I said there were 536 million active smartphone users in India, or at least expected to be by 2022. So I thought I'd do something for the same on the banking space. So by next year, by 2020, the end of, we expect there to be 150 million online banking customers. That's up from about 45 million in 2016. Now, like much else, that's a really big number, but when we look a little bit under the hood, things are not quite as rosy as they would seem. First, today, fewer than half of our active smartphone customers have an online banking app or a mobile banking app installed on their phone. And only about 12% actively use that on a daily basis. So there's some engagement problems on the banking side. But before we dig into what was spoken about at the FinTech event, which was actually very, very encouraging, I thought I would do a quick level set and give you all a quick view into the digital ecosystem, at least the apps in India. So, as you would imagine, this is a pretty vibrant ecosystem. There are lots of apps. There were 950 made last year. That's in addition to the thousands more that exist across 3 platforms, Android and iOS just being the biggest. But here's what we know. Of all those apps that are out there, after 90 days, most have fewer than 5% of their customers coming back on a regular basis to continue to engage with that platform. So that's obviously a bit of a downer there. We know that the onboarding experience is pretty crucial, and here's why. Within the first 2 weeks, almost every purchase that is going to get made will have been made. So if you don't get that customer within 14 days to transact, you're probably not going to get that customer at all. In fact, if you don't get them within the first 24 hours, you're probably not going to win either. Almost half of all purchases that the Indian consumer makes are made on a new app within 24 hours of its download. So the onboarding experience is pretty crucial. Now, to give you some context here, the average Indian consumer with an app will spend 385 rupees, or about $5.50. So it's not an enormous spend, but this is a massive market, and getting repeat usage would be incredible. But here's 2 things. 1, an opinion, and 2, a bit of a ground reality of the economy. 1, most entrepreneurs are not getting the consumer behavior right. And specifically, what they're not doing is they're not understanding, in absence of their product, which is meant to make life more convenient and to make things better in some meaningful way, they're not fully understanding how the consumer moves from, okay, I realize I need a thing done or I need a specific product, through to completion of that task. Because they're not understanding that path and the psychology well enough, they're not able to change the habit that consumer has, and we end up with less than 5% of consumers coming back after 90 days. So it's critically important that we get the onboarding experience right and the communication flow to that customer correct. Absence of that, well, we got problems. The second, more economy-wide problem for these guys is it's a really diverse competitive landscape, and it's very difficult given the language diversity as well as the scale of different apps that are out there for the average Indian consumer to find the app in the first place. So paid search is huge. And many of these businesses are spending a lot of money, big marketing budgets, to try to attract new customers to their app. And 70%, there's been a 70% increase in the marketing budgets aimed at continuing to get businesses engaged, consumers engaged in those businesses. That's a big problem. It's one thing to have a short-term marketing plan to pay to attract a bunch of eyeballs, but if you have to pay to continue keep your customers coming back and using your service, that's not a sustainable business model. So either one, it's the wrong customer, the wrong target customer, or there's something wrong with your product. And more often than not, it's not understanding the customer well enough or the user well enough. And as a result, the behavior doesn't change and we end up with poor engagement rates. But now, moving to this FinTech event, some interesting findings from this space, which echoed some things I said last week. First, most of the growth is coming out of Middle India, and specifically coming out of vernacular languages. And for those of you who are not familiar with the Indian system, vernacular means anything that's not Hindi or English. So Tamil, Kannada, Bengali, etc. Now, that's pretty encouraging because it's suggesting that we're beginning finally to have a proper ecosystem of content and businesses that are going to serve all Indians' needs. So that's great. But I think one of the interesting findings that came out of this was one of India's biggest digital lenders, Capital Float, was saying, listen, in their view, the transaction-based lending environment is saturated. It's really competitive. There's lots of people who are providing loans at point of sale, whether that be for small ticket items or mobile phones or two-wheelers, digital or traditional. That space is pretty saturated, and there needs to be some thought about how to find different segments, whether that means specializing on professionals or SME or the salaried class or several other ways. So what I thought I would do here to provide a little bit of value is I'd bring out a model that financial planners have been using with great effect across the world that hasn't fully permeated the Indian economy yet, and it's called the life stages model. So this is my little word of wisdom. I've posted a link to a life stages model above to give viewers a sense of what this is. But the gist of it is understanding where the customer is at that point in their life. Have they just shifted from one apartment to the next? Have they just bought a home? Have they just gotten a new job? Have they just had a baby? Or are they just coming back or going to a holiday? All of this information, all of this experience happens before the customer ever comes to your business. And this is one of the biggest challenges that banking, financial services, fintech, and traditional face all over the world. We're not ever going to get the same kind of engagement as social media. That's not what we do. But the experiences that we deliver for our customers online can be significantly better when we take into consideration what we know about our customers. We can find out all kinds of things about vacations, about moving different addresses, about having children. All of this information is super valuable and important to the business. So my advice, my recommendation, take a look at the life stages model, link above, understand what that journey is like from the moment your customer realizes they have a need for the financial service you offer, whether that's insurance, a loan, or some kind of savings instrument. Understand what their needs are there, and even if they don't come to you right then for that need, you will occupy a space in their memory. They will think of you, they will tell others, and you will you'll be more likely to get customers coming back to you over and over and over again, because you will have helped them earlier on the journey. So that's all for today, guys and ladies, sorry. The life stages model link above, but thank you again for coming back to listen. Have a great day.